There are many things to consider when trying to figure out if you should pay off an auto loan early. Depending on your financial situation, it may or may not make sense. Today, I'm going to be sharing with you the pros and cons and why it made sense to me to pay off my vehicle. Before we get into the video, I would love it if you could help me out with the YouTube algorithm by hitting the like button, and more importantly, make sure you're subscribed to my channel so you don't miss out on any future videos. Now let's get into it. Paying off an auto loan early can come with many advantages. If you can manage to pay off an auto loan ahead of time, you can save money on interest. For example, if you take out a $40,000 auto loan with a 60-month repayment term at 6% interest rate, you would end up paying $6,398 in interest over the course of the loan. There are many loan calculators online that can help you figure out how much money you could be saving. I'll leave a link down below to the one that I used in the description. If you do decide to make any additional payments, make sure they're going towards the principal only. Lenders technically own your vehicle until you pay off your loan. Once you pay off your loan, they'll send you the title, which will make selling the vehicle or trading it in a much easier process. When you own your vehicle, you're not required to have full coverage insurance if you don't want to. So you'll have more flexibility in choosing the specific type of coverage that you want. I always opt for full coverage for my own peace of mind. Another advantage of paying off your auto loan is reducing your debt-to-income ratio. DTI is the total money you owe every month compared to your monthly income. Generally, lenders like to see a DTI of 36% or less. Having a lower DTI could improve your chances for other types of loans, including home, personal, and business. Paying off your auto loan early can help you free up some cash, which you can use to pay off high-interest debt or save for an emergency fund. On the flip side, paying off an auto loan early may not be right for you, and there are a few things you may want to consider. Some people may argue that the additional money put towards a down payment or paid additionally each month may be better off invested. We'll get into this more later on in the video. Make sure your lender does not have any prepayment penalties for early payoff. If you have a prepayment penalty, make sure the money that you save in interest outweighs any fees that you may encounter. You want to pay off high-interest debt first. Take a look at your budget. If you have a low interest rate on your auto loan, your extra principal payments may be better off going towards high-interest debt, such as credit cards or personal loans. Anytime you close a credit account, there is the possibility your credit score may be affected. However, the dip in your credit score should be temporary. Auto loans are a type of installment loan. Installment loans are things like mortgages or student loans that have fixed payments and a designated end date. These ongoing monthly payments help build your credit. If you don't have any other installment accounts, it could be detrimental to close the only one that you have. This would obviously depend on the length of your credit history and multiple other factors. Now let's talk a bit about my situation. The total price of my 2020 RAV4 XSE Hybrid was $41,246. The main reason I chose to pay off my auto loan early was because I wanted my total monthly expenses to be as low as possible. My previous car had over 220,000 miles, so I had been setting aside money each month for a down payment on a new car. When I finally found the perfect vehicle, I made a down payment, and that brought the total cost of my auto loan to $27,920. I went through Bank of America and was able to get a 60-month auto loan at 2.74% interest rate, which is pretty incredible looking back now. If you have a low credit score, your interest rates tend to be a lot higher. My monthly payments were $499.89, and at the time, besides my mortgage, this was my largest monthly expense. After I purchased my new vehicle, I sold my 2005 Acura RSX. The Toyota dealership offered me $1,000 for a trade-in, which I thought was an insulting offer. So I decided to sell it myself on Facebook Marketplace. I sold the vehicle in less than a week. It sold for $4,100, and I put that money towards the principal of my auto loan. For the remainder of the loan, I continued to make extra monthly payments and paid it off after 22 months. I ended up paying about $709 in interest, and there was no prepayment penalty. If I wouldn't have made any additional payments, I would have paid about $1,988 in interest, which isn't bad at all considering my really low interest rate. But what if I would have invested the money instead? Investing the down payment and the additional monthly principal payments could be better off in the stock market rather than being put towards paying off a loan. Depending on the interest rate of your loan versus the returns of the stock market, this may or may not be true. The average yearly return in the stock market is 5 to 10%. However, this isn't guaranteed. You could end up making less than the 5 to 10% or even losing money on your investments. On the flip side, if you invest wisely and have a little luck on your side, you can potentially have much greater returns than the 5 to 10%. In my case, 2019 to 2021 had an unusually high return rate, so unfortunately, I missed out, but who would have known? Whether or not to pay off an auto loan early comes down to each individual's financial situation. You should consider your credit history, how much interest you are paying versus how much you would save, if you have any other high interest debt, and whether or not there's a prepayment penalty. Run some numbers to determine if it makes financial sense or if you should apply the extra funds elsewhere. Thanks so much for watching. If you guys enjoyed the video, make sure you give it a thumbs up, subscribe if you aren't already, and I'll see you in the next video.